The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 8th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I hope you're off to a great start of your day. Let's make sure that you and I, that we do everything that we can do to have a wonderful Wednesday. And we should always remember that every day is a gift. And as I begin my day, let me say thank you for the gift that you have given me by your presence here today. That is why they call it a present, isn't it? And I do appreciate it. Now, for the next hour, what I'll do is I'll share with you extraordinary tools for trading and investing. Those tools include our lightning bolt pattern, our A to B equals CD pattern. We'll take a look at the Fibonacci retracements and expansions. We'll take a look at Japanese candlestick charting. We'll take a look at the Rhodes momentum trading signals. We'll do everything that we can do to help you identify where the market is headed to. And, of course, this is an interactive show. That means we'd love to hear from you. So you can give us a call at 877-927-6648. Internationally, you can dial us at 727-445-1044. And that way, together, you and I, we can go hunting for bulls and bears. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow off about 5 points, trading out at 16,714. S&P down 2. Trade at 1933, composite off 5 at 43.97. Russell 2000 breaking through its consolidation pattern, so we got to keep a close eye on that. She's down $2.70 right now, trading out at 10.73. Gold up $5, silver up a nickel, platinum up a couple bucks right now. Leading the charge to the upside this morning is Allergan. AGN is the ticker symbol, up $2 and change. Blackhawk Networks, HAWK, that's up $2.50. Costco up a couple of bucks. Arista Networks up $2. McKesson Corp up $1.50. Yum Brands up $1.60. Skechers up $1.18 out there. To the downside, Emerge Energy Services down 8%, down $8. GW Pharmaceuticals off 8%, down $6. CF Industry Holdings down about $6. GoPro off 5. Spirit Airlines down 3. Pioneer Natural Resources down 3. Concho Resources, CXO, off a couple of bucks. LinkedIn down $3 as well. All right, so let's go take a look at the indices first. Let's start off by looking at the indices. Let's go take a look at the S&P 500 first. Let's take a look at, it looks like it's a weekly chart here. No, that's not the weekly chart for the S&P. That's for Gold Corp. Let's see if we can get the S&P up here from a weekly standpoint. Okay, so we got the weekly standpoint out here of the S&P. Let me take a look at the indexes. Let me get rid of these market profiles out here. I don't believe that they are accurate on the indexes. Okay, so if we take a look at the S&P weekly. And we take a look at retracements. I'm just going to do this a little bit cleaner. From the low from August the 4th to the high. This is the week ended, the high of September the 15th. What the S&P has done is it's moved down to that 0.786 retracement level, 1929.28 is the number if that level fails. And at this stage here on a weekly basis, the S&P is trading into that swing point of August the 4th out there. So the top of that is 1942.92. That's going to be key for the week. If it closes above 1942.92, you'll have your second rejection on a weekly basis of the August 4th swing point. If it closes inside that, it says the low of that, 1904.78, should be the area that would get tested. That would then set up a 100% move of a move. That is what the weekly chart is showing us. If we go take a look at the NDX 100, let's take a look at the NDX. $NDX out here. Let's go see what it is doing on its weekly time frame out here. If we take a look at it from the same real swing point. Well, am I doing the same swing point? No. Let's do it. I think it's this swing point out here. It's really a junior. It's a little doji candle from a weekly standpoint. But if I go from the low here from August the 4th to the high out here, we'll also see this is at the 0.618 retracement level. This here has not tested that swing point, has not gotten down to the August 4th level out there. So the NDX still stronger as we take a look at its weekly chart than the S&P 500. Let's go out to Cheyenne, Wyoming, to Larry. Larry, thanks for calling. Thanks for holding. How you doing this morning?
Hey, good. How are you, Steve?
Excellent.
Oh, good, good. Well, I have a question. It is involving both gold and the GDX, which I went in the trade Friday.
Okay.
And I use multiple systems, but it definitely was close enough to the one on the daily. It was close enough to the 1.27 expansion.
You're talking the GDX specifically?
Yeah, that I was willing to take that, and I saw indications on the stochastic on gold that it was improving, relative strength.
Yes.
But and the MACD has crossed positive today nicely on the gold. How do you feel about? Do you feel the weakness in the gold sector, and also, on the weekly? I'm only considering this a counter trend bounce because the weekly from the month of June it came through on heavy volume. However, the timing between each weekly low, 24 weeks, 22 weeks, and now 18, it's in the range for a bounce. So my question is, I don't have enough experience. I just realized today that what do you do with gold stocks when gold, the underlying gold is going to rally and the market's weaken, so the stocks are going to not rally? How does that catch-up work?
Good, excellent question. And good analysis, and really a great question out here. My answer to that, and I'm going to try to pull up a chart and see if I've got that out here for us. If I don't, I can go ahead and build it, but I prefer not to have to build it if I don't have to. And this is going to be the chart. Here's the chart. So are you watching this, Larry, on Tiger TV? Hello? I can't tell if we got Larry or not. Lost him. Okay. So I think, so let me, hopefully Larry is listening in, and let me see if I can recall his question. So his first, or his primary question was, how do you trade the gold stocks?
I am.
Oh, okay, great. You're back on. Okay. So the chart that I've got on my screen out here, the top portion of it is gold. The bottom portion is the actual GDX. And what you're going to see is the tango that these that this pattern has. In other words, the GDX is going to be in a direct relationship to gold. And what you pointed out, and I think this is important for our listeners to hear, at least this is my interpretation. What you pointed out is that the gold stocks were weaker than gold. We've seen gold rally a bit here, and I think one of your questions is, so what does that mean for gold stocks? I think gold stocks here, I think that gold stocks, and yesterday I think was kind of a washout day, and we're seeing gold stocks go from weak hands to strong hands out here. And I think it's a transition that's trying to be done quietly. And my opinion is that the gold stocks here are going to catch up to gold. Now, you've got really a couple different ways to play it. One way is to go ahead and play it by using that basket of stocks, mining stocks, the GDX. Another way to play it is to go back and try to find the stocks that have held up the best and maybe just create your own little basket of mining equities. Now, because you said the way that you're looking at this is only being a counter trend rally, then I would say then just stick with the GDX. If you were one that was of the opinion that, and this is my opinion, that what we're about to see here, what we're about to witness is a huge bottom in gold and a huge bottom in the mining stocks as well out there. So you and I have a different take on it for different reasons because of different tools that we use out here. But I think we're seeing the next significant low in the metals as well as in the mining equities too. So those would be the two different ways. And because what you can do is you can go to the GDX. If I take a look at all the gold stocks today, I've got on my screen up here, there's only two. There's Taseko Mines and First Majestic are the only two that are slightly in the red here as we speak this morning. So I think, in my opinion, this is a place to be treasure hunting.
Steve, do you see on the daily chart on the GDX, would you pick out the the swing point from 8.85 as an initial target, a normal, and that'd be around the. Is that how you view that?
Yeah, I think whenever you enter a trade, that your eyes automatically should go to where's the swing point. And so what you're eyeing is, you used August the 5th. You could use August 29th. You could use August the 13th. You could use any one of those areas out there. I'd say probably August 13th. And then what you can do is, one of the things, do you use retracement tools at all? Just to measure?
I do.
Okay. So I would just simply go from that high to the low, and I'd say, okay, what's happening as price gets to the $23 mark out here, between 20.42 and 23.17, that would be a nice percentage move out there.
Yeah.
And you would expect people to start taking some profit off of the table out there. And then it really depends on your time frame horizon. It doesn't mean price has to stop there, but measure volume as it's moving up into that area, assuming that it does. I can only give you how I'm looking at the mining sector, the metals sector, and it is completely different than the way that many others are viewing this. So I'm on the side of the boat that has got just a few of us, in my opinion.
And Steve, my last question, if you could. You got a minute here?
Yeah, go right ahead.
Okay. During the trending markets, you get these rapid V spike. It does a retracement and then it V's up and boom, you got it does a C point and you got to be in it.
Yeah.
When it's doing a fairly, this is we're talking a weekly or intermediate bottom. So are these typically very I call it stressful, you call it. But are they choppy until the direction is reestablished? Is that just what you have to go through typically?
Now, you're referring to what? Okay. To gold or the GDX?
Let's say gold, gold or even the GDX, it doesn't matter. If we're putting in an intermediate low, they don't typically put in a crisp V bottom as they do when they're already in a trending, say, bullish trend. Sure. Is that true?
Well, I guess here's the thing on the GDX, because you're focused on the GDX, and you've got this weighted ETF, and it's got some trash that it has to carry along with it. And I wish I had kept these in order. At one time, I had these in order with regard to the weighting structure inside of the GDX, and I don't. But what you'd look, if you do get a V-shaped bottom, that tells you that you've got a very powerful move that's underway. So, I think that, and if we look at the GDX specifically on a daily basis, you could say that you had a fairly decent V-shaped bottom that occurred back on May 29th, as was coming off of the May 5th level. So that was pretty much a V-shaped bottom, and that was telling you that it wanted to go to higher price. If you want, you can hold on through this break and we can finish up the conversation.
I have a question there.
Yeah. Okay. So we'll come back out to Larry and Cheyenne. We're ripping apart the GDX with great questions as well as gold. You too can get in on the action. 877-927-6648. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Flat market out here at the moment. Dow's off 3, S&P down 1, Composite off 5. We're on the phone with Larry in Cheyenne, Wyoming. We're taking a look at the GDX. He's got a lot of great questions. So, Larry, what I was doing during the break is I went to the gold miners vectors ETF just to see what the current top holdings were. Now, there's 41 equities inside of the GDX. And what's interesting, you can go over, you can Google it, you can find it over at the Van Eck mutual funds out there. And it gives you what the holdings are and their percentage of the weighting inside of that structure, and it updates it each day. So through the close of yesterday, the top 6 equities represent over 50% of the entire GDX. So 6 out of 41 equities represent that holding. That's why I'm suggesting that if you're poking around inside of the GDX, one way that you want, the first thing that you want to do is you want to at least, it's pretty easy to go take a look at 6 equities. Now, in my case, I don't have the data feed for NCM. That ticker symbol is for Newcrest Mining. And that is out of Australia, I believe. So I don't have a live feed. I don't have even a delayed feed on that to take a look at it. But so you've got really a couple of choices. Pretty easy, in my opinion, to take a look at least those top 5, which are Goldcorp, Barrick, Newmont, Franco-Nevada Corp, and Silver Wheaton, to get a feel how they're doing. Because if those 5 maybe have been struggling, you might want to look at the other, 36 equities and see which ones look the best as far as taking a trade with inside the mining structure out there. Does that kind of,
Well, that makes total sense. I'm just not at that point yet where I'm really up to that. I just trade indexes mainly yet, just because of where I'm at in my trading skill.
Which is okay, which is cool. But then the thing to really improve that skill, then, if you're going to trade just the indexes, then I think it would be imperative for you to pay it to focus on what's Goldcorp, Barrick, Newmont Mining, Franco-Nevada, Silver, Wheaton, and because you may not have the NCM ticker symbol, just go down to the next one, which is Randgold. And if you just watch those, if you're going to trade the GDX, I think your decision is better made by seeing what's going on with those equities than the overall GDX itself.
Okay. Well, no, I can't argue with that.
Okay. Well, you can. You're welcome to.
No. Your way of analyzing it's pretty amazing. Can I just ask you one last question on the monthly chart of GDX?
Yes, absolutely. Yeah.
Okay. When initially the gold stocks hit their, whatever you want to call it, their 9-year cycle top, their top, and they cascaded down into the 08 low. It was on pretty light volume relative to the December of 13, and if this holds this current low, which we don't know yet, but it looks like the volume will be pretty high this month. How did you factor that into your thinking, or did the 08 low? I mean, I understand it. Where that bar closed on the monthly is basically where these 2 other points are. Did that factor into your thinking? Well, we had in the 08 low, the bar closed roughly where we're getting these 2 other lows here.
If I had only been taking a look at the charts and volume and was only focused on one element, then I would have used that as a factor. But my factoring in what I believe gold is going to do stems from kind of like, I'll walk you through the process here. And that process, in my thinking, was to first take a look at the first understand the pattern between gold and the GDX. So that, again, I'll put that chart up on my screen, and the top chart is gold, the bottom chart is the GDX. And so what I know there is a 100% directional relationship between the two. I used to have a chart out here. It seems like I have misplaced it, and it was the correlation between the U.S. dollar index and gold. And I can't go ahead and build that here during the next minute. But what you'll see is a direct correlational relationship there. So then what I wanted to do was say, well, okay, what's the big money doing out here? And I'll put this chart up on the screen. And what the big money is doing, what the large commercial traders are doing, is they're now down at a even less net short position than when the last low was made out here back in June. And that tells me the smart money is gearing up for a large move inside gold. If they're looking for a large move up in gold, that means they're looking for a large move up inside of the gold equities as well. And then it's the dollar index. And the dollar index, those same commercial traders have moved to a net short position inside of the U.S. dollar index.
Yeah.
So I'm expecting the U.S. dollar index to fall, gold to go up, the gold miners to go up, and everything in a very large way.
Great analysis. Yeah, I see it totally. Okay, thank you, Steve.
Hey, thanks so much for calling, Larry. Have a great day.
All right.
This is Steve Rhodes. This is TFNN. That was Larry in Wyoming. All great questions. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up a buck, S&P down a buck, composite off 2, Russell down a couple of points out there. And if I go back to just as a follow-up here, let me see if I can find that chart. I was trying to build it here. This is a chart here of, that's the wrong chart. How did we do? GG. I wanted GC #F. There we go. Equals 1, that would be good. The top portion of my chart here is gold. The bottom portion is the U.S. dollar index, which I went ahead and I inverted the U.S. dollar index. So obviously we know the U.S. dollar index has been rising. On the bottom portion of my chart, I've inverted it because of its directional correlation to gold out here. And I mean, it is absolutely, it is really direct. And that's why in answering Larry's question about trying to put together, taking an analysis as to what gold, what the mining stocks might be doing, knowing that it's got that, and it's a directional correlation. It's not as if every tick in the U.S. dollar index is equal to X number of dollars inside gold. I wish it were that easy, and it's not. And some of those tools that I shared, by taking a look at what the commercial traders are doing, they can't really be used as a tool. So we have to come back and take a look at other tools such as candlesticks, tools such as A to B equals CD patterns, retracements, wave counts, TAS market profiles, any set of tools out there that provide you with the reliability expansions of swing points out here. And what we can see in the case of the U.S. dollar index, at the bottom of my screen, it's trying to create in this case here, it shows a bullish engulfing. We know that really it's a bearish engulfing if I were to flip things around out here. But in essence, if you just take a look at it, it's trying to, on this chart, it's trying to form, given this is a weekly chart that we're looking at, it's trying to form, and I thought I would use the weekly chart, just as it's less cluttered and allows you to see that direct correlation between, if you take a look at gold, when it was making its highs, the U.S. dollar index was making its, well, in this case here, again, because it's inverted, so hopefully that doesn't confuse you, but you can see gold actually made its high back in October of 2012, and the U.S. dollar index had actually made its high just a couple weeks before that in September of 2012. So you can really see the correlation. Sometimes that correlation gets thrown off, but for the most part, it's really there, and that's a reason why. That's really that's the canary in the coal mine out there, is the U.S. dollar index, and one might think that the move to the upside, in this case here, it's to the downside, perhaps that was overdone. And that's why we're going to see some type of retracement. Where that comes from, I don't know. In the case of gold, what you'd love to see here, if you were looking at this chart, you'd love to see two bullish engulfing candles. This week here, that would require gold to get above, well, let me put my data window back on the screen. That would be to get above the close from the open from last week, and that open last week was at 12.19.10 here at 12.09. So it needs another $10 out there to give you that bullish engulfing. Does it have to in order for it to form the bottom? You know, the answer there is no, it doesn't. Then if you go back again to those mining stocks, if you were to, as an example, take a look at Barrick. Barrick Gold has about a 12% weighting inside of the GDX out here, and here's the monthly chart inside Barrick Gold. In the case of Barrick Gold, it looks like it wants to go test the lows from July of 2013. That low is 1343. So far, the intra-session, the intra-month low has been 1357, so it's got a little bit ways to go. Volume so far this month, 77 million shares. Last month, 218 million shares. 218 was going into 421. So Barrick Gold, which is the second weighting structure inside the GDX, pushing into that swing point with lighter volume out there. Can't tell you whether Barrick Gold is going to be a big mover to the upside, or maybe it's one of the other ones that are not really part of that 10-top weighting structure out there that might have a better opportunity for a bounce out there. So no matter what ETF structure you might trade, if it's the Qs have the same thing. Inside the Qs, I think I still might have that up if I'm not mistaken. Inside the Qs, as an example, the top 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So the top 13, Apple, Microsoft, Google, Oracle, Intel, Amazon, Qualcomm, Cisco, Comcast, eBay, Amgen, Express Scripts, and Gilead, those are going to have well more than 50% of the weighting inside of an index that's got 100 stocks. So you certainly want to be paying attention to what's going on inside of each of those equities as you trade those ETFs out there. It's a little bit more work, but I think what it will do is it'll provide a little bit more clarity as to what you might be doing and or why. If we take a look at Apple on its daily chart at this stage here, it just continues to chop around. It hasn't broken down, that's for sure. It's traded down into its point of control, 98.42. If we take a look at its TAS market profile out here, we know Apple's got this huge volume spike to the upside and to the downside. That was on September the 9th, 189 million shares. Pretty good likelihood that at some point in time that low gets tested, 96.14, but it's not going to get tested until it breaks that market profile low of 97.66. So the number one weighting inside of the Qs out here hasn't really broken down at all. If you take a look at the number 2 weighting, you'd go to Microsoft. That's up 30 cents as we speak here. Let's take a look at what has it done during this little market sell-off that we've seen. If you really come to the swing points, you have to come all the way back here to August the 6th to do any kind of measurements. And if we go from that low to the high out here on the trading session of September 9th, Microsoft has only done a 0.382 retracement. Folks, that is strong. That's not just strong. That is super strong. Now, what does Microsoft need to do to get back to the bullish side of the sidewalk? Well, it would do itself a lot of good to get back above the 4602 mark. That's your TAS market profile low out there. But Microsoft, the number 2 weighting inside of the NDX, it has absolutely not cracked. And not only has it not cracked, it's got a high volume high, September the 19th. You think that Microsoft might be able to go ahead and pull the Qs to the upside out here and go test those highs, maybe even take out those highs? I think we want Microsoft on the fence out there. That's assuming that you're on the bullish side. If you take a look at Google, Google's up a couple of bucks this morning. Let's take a look at what Google has done. Now, Google's made it all the way back to the lows out here from, August the 6th. Let's see what kind of volume Google's been doing. So it looks like maybe that August 6th low could be tested. That's 560 even, Steven. You're at 560.60 right now. You've been down to 559.75. Volume today, 535,000 shares, testing 1.3 million. So, yeah, I just have to say that Google, number 3 weighting inside the Qs, that's testing that low with the volume. So its work to the downside may not be over. We'll have to really see how the day plays out, but pretty good chance. We've only been trading for 41 minutes out here, 9:30. About 50 minutes, I should say. 51 minutes is how long we've been trading, and you've already got about half the volume on that swing point. So pretty good chance that Google is going to at least test that area again, maybe even take it out and move lower. If you take a look at Oracle, not the Oracle of Omaha, but Oracle, ORCL. If we go ahead and we take a look at it, see what it is doing, it's completed a 1-to-1 A to B equals CD to the downside. It did that on the trading session, had a little key reversal session, it looks like here on October the 2nd. So if that key reversal session is taken out, there were 14 million shares on that trading session. Today you're trading down into it with about 3 million shares. You'd have to say that that's traded down into that level with volume. That says that the October 2nd ought to get tested. That low again is 37.92. You break below that, that says you move to the 1 to 1.272 A to B equals CD to the downside. That would be 37.43 would be your next stop. That's what's going on inside of Oracle. If we go take a look at Intel, Intel's up 14 cents, trading out at 33.33. This has got huge strength out here. This looks more like Microsoft. Maybe not as good as Microsoft because it doesn't have a high volume high like Microsoft, but it does have a huge breakout session, and that was from July the 16th. If you go back to its, let's see here, where's its August lows? So the August lows out here looks like it's actually testing the August lows. So let's see what Intel is doing and just trying to use that benchmark here. So August 6th, Intel did 27 million shares out there. Today you're pulled back with 8 million shares. So Intel is pulling back in that August 6th area with a bit too much volume. However, it's got some pretty strong support. It has not been tested yet. That's going to be at the July 15th high. If it breaks through these lows out here from August the 6th, again, that price point being 32.39, I would expect it to find support at 31.80. 31.80 is the top of that July 15th level. Just as long as we're here, let's continue on. Amazon. Let's go take a look at Amazon, see what it's doing. It's off a couple of bucks as we speak right now. Come on, populate out here. Okay, Amazon's got a little hammer candle that had formed here back on October the 2nd. That hammer candle has a volume of 3.5 million shares. You're pulling back today with 837. 8 times 6 is about 4 million shares potentially. So it's trading into that with some volume. That hammer candle should act as support. Do you know the expression? You break a hammer candle. When I say break it, I mean you close below it. If you're long, you're wrong out here. So we'll see whether or not that hammer candle can hold. That is inside of Amazon. If we take a look at Qualcomm, Qualcomm's up 21 cents as we speak. Qualcomm out here, not a hammer candle that it had on October the 2nd, but if we look at that October 2nd level, 7.5 million shares. You're trading into it today with 1.5 million shares. So not as weak, meaning price is moving down with a little bit lighter volume out here. Let's see, what else does Qualcomm actually have? It does not have an A to B equals CD. It had the potential of an A to B equals CD, so we'll just take that off of our chart as we speak right now. It did have some volume off of the highs, so it's going to struggle on any bounce up into the $77 area, specifically $77.63 out here. But at this stage, even the swing point low from August the 1st, that's got 15 million shares. You're moving into that with light volume. So it looks like Qualcomm should find some support in that 71.82 to where it's trading at about right now. If we take a look at Cisco, CSCO, let's go see what it is doing. So Cisco right now, having taken out its forget about October 2nd. It's trading down into the August the 15th swing point. That swing's got 33 million shares. You're down with 10 million shares. So Cisco is struggling. Cisco, if it can take out that low from August the 15th, take out that 24.27 level, that would set up an A to B equals CD to the downside because it's got volume today. So if it's going to do it today, could be the day. And if it does that, gives you a price projection of about 23.61, 23.12. But what do we have at the 23.12 level? Interestingly enough, we've got its sign of strength out here. That sign of strength on May 15th. That says that the low, that gap that's open, which has not been tested, maybe that gap is going to get filled out there. That just means market moving down into its sign of strength out here. That sign of strength says that the 23.05 level, so 23.05 to 23.12 should be good support if Cisco breaks through 24.27 and does it with more than 33 million shares. It's got the volume today in order to be able to do that. Comcast, CMCSA. Let's take a look at that. It's got a little Morningstar reversal signal out here. Looks to be relatively strong compared to the others that we look at. It had that Morningstar. That was a 3-candle session. That was October the 1st, the 2nd, and the 3rd out here. That says it should have good support down at 51.64. That October the 2nd high, October 2nd swing point, not really a high, 18 million shares, and that was tested yesterday with only 12 million shares. Today, however, already done 5 million shares, has not tested that. We'll look for that high to be tested again, 52.97, and that is on Comcast out there. So it just assists you to take a look at, let's take a look at Amgen, Express Scripts, and Gilead here. If we take a look at Amgen here, just to kind of finish out the top 13 or so. If we take a look at Amgen, it's certainly stronger. It looks more like a Microsoft chart. When I say that, if you take a look at September 19th, it has a high volume high, 6.7 million shares up at that price level of 144.46. At some point here, Amgen is going to get back up there and at least test that out. This is certainly not broken down to the downside from a volume perspective. It has close below its market profile support level. At this stage, that becomes resistance till it gets back above it. 137.58 is that number. You're trading at 136.83 out here, and that is on Amgen. If we take a look at Express Scripts up 41 cents this morning. Let's go see what it's doing. Express Scripts traded right into its level of support here yesterday. It was wide price spread, accelerated volume that took place on July 30th. That was 11 million shares. The test yesterday on 3 million shares out there. So in the case of Express Scripts, as an example, I don't know what took place on this trading session of September 19th. I know that was a high in the market. We've got volume out here. It wasn't a high, it wasn't a low, it wasn't wide price spread out there, but so that could be a level of support. But let's just say that the market you were gonna play a counter trend rally and you wanted to play it in the Qs. I would say, shoot, go look at something like Express Scripts. Go take a look at something like Microsoft. Go take a look at something like Amgen, because those charts are stronger than the overall ETF out there versus playing the entire basket. Now, let's go ahead and finish this off here in the next 5 seconds. How about Gilead Sciences, GILD? Nothing has broken down here in Gilead. Gilead has found support at its market profile yesterday, 102.93 out here. So this equity has not broken down. Right now, we've got the Dow. She's trading off 32 points. S&P down 5. Composite off 15. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Got the Dow off 32 points. S&P is down 6. Composite down 18. Russell down 7 points out here. NASDAQ, the DAX off 96. FTSE's down 21 points out here. So let's go back. I covered this during the first hour. Have not covered it during the second hour. But if we take a look at what is Stevie looking at? Even though right now you would say maybe Stevie's in camp run-amok out here. Let's just simply take a look at the New York Stock Exchange. The patterns that have produced significant lows in the past, those patterns exist out here as we speak right now. And if you let me just try to expand this up. That might be an easier way to actually see it out here. Let me see if I can do that. Can I do that? No, I can do anything. Got got to like somebody who says he knows he can do anything, right? I know that's how you feel as well. There we go. Okay. Now, if you take a look at this, is actually a better view. The top portion of my screen, that happens to be the New York Stock Exchange. Right now, we can see it's made a lower low. It's gotten below the October 2nd low out here. 10,441 is the number. You're at 10,435. Now, others might say, oh, man, that is just absolutely bearish. Of course, those others might not be paying attention to the message of the price oscillator. And if you take a look at the lows that were formed back here in June of 2013, really the last major significant, we've had some other lows since then, but a real significant low out here. We saw really the same formation. We saw three little higher lows out here inside that price oscillator. And that is exactly what it is that we've got going on today. Now, look, that whole thing can change and it can fall apart. But until it falls apart, its message down here at the bottom is the same message that, quite frankly, it gave out here at its most recent highs, as it was making higher highs, doing it with a declining price oscillator out here. The last time that we saw this little price oscillator divergence with price, well, that took place between the time period of July 31st and the low that was put in on August the 7th out there. So, that took about a week. I don't know how long it's going to take in order for this bottom here to form. But at this stage, that's what it appears to me to be doing. So that's utilizing the wider swath of the market. And if it takes out the low here, if it takes out that price oscillator low from that was generated on September 25th, and I'll have to come back and take a look at it and say any bounce might just really be a counter trend rally out there. But at this stage of the game, that's what it's got going for it. The VIX index out here, what it's got going for it is is being way outside this Bollinger Band here, which in the past has also been a part of signaling a bottom out here. So a choppy bottom is what we've got. We didn't take a look at any of the index ETFs and or the volume. Let me see if I can do some of that here pretty quickly. Let's go take a look. Let's take a look at the IWM specifically. The IWM yesterday broke through its consolidation pattern. That is never a good thing. It did it on very light volume. Nonetheless, it still broke that 13-point consolidation, and inside the IWM that says 94 could be its price target out here. The swing, it broke through a hammer candle. That was from May 15th, and that low was 107.44. That had 75 million shares, and yesterday's push down was only 40 million shares. Nonetheless, it broke it, although it was with light volume. Today, so far, we've seen 12 million shares, so a little bit more volume than what we saw yesterday. That's inside the IWM out here. So from a reversal standpoint, you'd want to be paying attention to what the IWM, since it has now broken what should be a very bearish pattern inside of the marketplace. The Qs yesterday moved lower with light volume. What I would like to see in order to set that hook would be a big, huge, high volume washout, because in the past, those have marked lows inside the marketplace. Folks, stay tuned. Our man Basil Chapman will be up next. Have a wonderful Wednesday. Look forward to seeing you tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.